Welcome back to the Mortgage Reports. I'm Mike Eshelman, and with me today is Michael Gifford, the CEO of Splitero. Splitero offers homeowners with better options to access home equity without additional monthly payments by providing a lump sum of cash in exchange for a share of their home's appreciation or depreciation. Michael, I have loads of questions to ask, but let's first start by hearing from you. What is your background and why did you start Splitero?
Yeah, thank you for having me on. Started Splitero a number of years ago because I am a real estate investor by trade. So my entire career was in real estate investment, and I saw really coming out of COVID, home prices were increasing rapidly. There wasn't a lot of inventory, so homeowners, when they wanted to sell their house to buy another one, that was really difficult for them to do so. And if they sold their house and then went to rent, rents were also going crazy and increasing in price a lot. And so homeowners who had difficult times accessing their home equity would use a credit card or sell it after move to a tertiary market. And I thought there had to be a better way. I found the HEI, which is what Splitero produces, and decided to start the company because I thought that there was no better time to give homeowners a newer financial product to help them access the equity in their homes.
Yeah, so well, let's start with kind of HEI 101. Can you give us the quick minute of, what is the product at a high level?
Yep. So most homeowners, when they think about accessing the equity in their home, think about a traditional financial product, typically a home equity line of credit. Um, the HEI is a different sort of financial product that allows homeowners to access the equity in their house typically without monthly payments and easier qualification than a traditional financial product. So there's no income verification, there's no DTI requirement, there's no tax returns, much faster process because it's about the equity that they've built up in their house. And so we sit behind their current mortgage usually. So their first rate, low rate mortgage stays in place. We make an equity investment in their house today. So we give them a percentage of their home today for a share of the future value. So in the future, whenever a homeowner looks to sell or refinance their property, they can repurchase their HEI, but allows them to get a lump sum of cash today. And then we ride the value, like you said, of their home into the future, however long they have left on their mortgage. So as much as 30 years, as little as 10 years.
Got it. And what's the problem that the home equity investments are designed to solve for homeowners?
Right now, where we're at, homeowners have a few things. They have their home, which is an asset that's gained an incredible amount of value in the last decade. They also have a low rate mortgage. So borrowing costs have gone way up. And so they kind of have two assets. And really, your average homeowner now probably has 50+% equity in their house. And so they've got this savings account that's very difficult for them to access.
Yeah.
So it allows easier access to this equity so they can get cash and better their lives.
Now, when you explain home equity investments to someone who's only really familiar with home equity lines of credit or cash out refinances, how do you go about explaining it to them kind of in basic terms?
Yeah, it's an alternative to that. And so,
Mm.
really, a homeowner that's looking at accessing the equity in the house should look at all the alternatives. But what I would say most homeowners are looking for with this product is it's easy to qualify, it's really easy to understand. You're selling a portion of your home's future value, and there's no monthly payments. And that is a huge selling point for all homeowners now because nobody wants another payment every month.
Yeah, especially with everyone's wallets being so much tighter today than in previous years. It makes a lot of sense. Now, these products haven't been around for, at least to my knowledge, maybe they have, but I don't think they've been around for a long time. Why have these become more visible or relevant over the last few years? And I think you touched on it in an earlier question, but why are they more popular today?
Yeah, I think today in general, it's still difficult for a lot of homeowners to think about selling their house and buying something else because of the interest rate environment.
Yeah.
So not only has the house gone up in a great amount of value over the last few years, but they also now have this 3 or 4% mortgage that they don't want to replace, and so they need an alternative. They need a better option to access that home equity, which allows, folks like me to kind of start a company to help people do that.
Yeah, and I imagine there's so many different reasons potential customers could be coming to you with various financial goals. Which consumers do they tend to work best for? Looking at the HEI product.
Yeah. All homeowners, right? So most people that have owned a house over the last kind of 7 to 10 years have built up this amount of equity. If they don't have a high FICO and a high income, it's really hard for them to use a traditional financial product. So we really help homeowners across the spectrum, from the lower FICO homeowners that just can't go to a bank and get the
Mhm.
equity out of their house, all the way to the 800 plus credit scores. Most consumers are using it to pay off debt and keep up with cost of living. As you said, everything's still expensive, and people are really cognizant of their monthly cash flow.
Yeah, and there's certainly going to be pros and cons to any financial product. What should homeowners understand about the trade-off that they're making when they use an HEI instead of taking on debt?
Yeah, I think generally, depending on the scenario, it could be a little more expensive, right? However, easier to qualify for. You can get your cash faster, or even just you're able to get cash where some homeowners aren't able to go to a traditional financial institution. So the homeowner really needs to think about their own situation. The hard part about getting more debt is if you don't pay back that debt, the bank's going to run a foreclosure
Yeah.
process on you. And so that monthly payment, not having one, is pretty unique to our product and something that a lot of people really like.
Yeah. Now, is there a point in the homeowner's journey when an HEI tends to make more sense, than earlier or later?
Yeah, certainly somebody that's going to be in their home for quite some time. So, how the HEI works is over time, we're riding that value of their house with the homeowner, and so the longer they stay in the property, typically it's a lower cost of funds than they would get from any other financial product. And so longer duration adds are things. With most things, there's kind of a trade-off. That means
Yeah,
short duration, 1 2 years could be more expensive.
that makes sense. Now, how do the investment outcomes differ in, say, a declining market or a flat market or even a rapidly appreciating housing market? How does that all end up playing out?
Yeah, so we get a set portion of the home's future value at origination, right? We don't know what the house is going to worth. Nobody does. It's kind of
Yeah.
it'd be a crystal ball if we had one of those, but we don't. And so the homeowner knows exactly how much of the house Splitero is going to have and be owed for that portion of the value. What we also have is the homeowner safety cap. So we also have a max,
Yeah.
no matter what happens. If the house goes up 5 times in value, that's the max that Splitero is ever going to make. So we protect the homeowner's upside. We share in the downside. So the home goes down in value, our set percentage of the house doesn't change either.
Okay. Now, there's a broad spectrum of homeowner profiles in the general mortgage industry. Now, which profiles tend to benefit the most from home equity investments and which tend to see, maybe not the best outcomes?
Yeah. Um, the difficult question. I think
Yeah.
who benefits the most, honestly, is probably those homeowners that can't afford or they can't qualify for traditional financial products, right? They don't have a lot of alternatives. There's a large subset of homeowners that maybe have a low 600s or even mid or high 600 FICO score that they can't go get a home
Yeah.
equity line of credit. So their alternatives are sell the property, which is not great, or use a credit card. And we're way better than using a credit card or having to sell your house. And so that, I would say, group is benefits the most by Splitero being around.
Okay. And which home equity investment exit strategies tend to create the most, say, financial risk for homeowners?
Yeah, probably the short term exits,
Yeah.
the people that want to access $150,000 and then repurchase it in 2 3 months. They can do it. There's no prepayment penalties at any time, but it's more higher cost upfront.
Yeah, so it's essentially buying in a very expensive product that you're just going to turn around and get rid of, very shortly. So that would make sense. Probably not the best financial move at that point.
Right? There might be alternatives for that case.
Yeah. Um, Now, what would you say is the most important question homeowners usually fail to ask before signing an HEI?
Yeah, I think these homeowners that we work with are generally pretty inquisitive, right? It's a newer financial product, so they want to make sure that all their bases are covered. I think that someone, when they're looking at accessing their home equity, they need to look at their own financial situation to see what the best alternative is. The uniqueness of the HEI not having a monthly payment
Yeah.
really changes how they can kind of forecast. If you lose your job or something, you're normally worried about how do I make this monthly payment. Without us having that, if the homeowner situation changes, they don't have to worry about another bill being paid at the end of the month.
Yeah. As I mentioned, I've been in the mortgage industry a long time. This product just popped up on my radar in the recent years. It's really there's so many folks, and me being in the industry, not knowing about it, I can imagine your normal consumers largely being unaware of it. So if they have a financial goal and a need, and they're not able to accomplish that through what I'd say a traditional mortgage product, a refinance, or a home equity line of credit, or a home equity loan would accomplish, most kind of just think I don't have any other alternatives available to me. So I'm glad we were able to cover this as an
Yeah.
alternative for some people to explore and see if this meets their financial goals. If there is someone listening or watching this that has interest in learning more about it, how could they get in contact with your company?
Yeah, Splitero.com is the easiest way. The application is very short, easy for them to fill out. They'll speak with one of our homeowner advisors who are licensed mortgage loan originators. They can talk through different options with them, explain the product, answer any of their questions. As you mentioned, we work with homeowners across the life cycle, so we hear the stories of people paying off debt and credit cards and medical bills, but then the cool stuff too of starting businesses or
Yeah.
buying another property, paying off their mortgage so they have no mortgage. There's a lot of like really unique stories that this product can help.
Well, fantastic. Thank you so much for joining us. I really appreciate it. And for those that are watching online, look in the description below for a link for additional information. And Michael, thanks for joining the show today.
Thank you.